Hello YouTube and welcome back to another video. Today we're going to be talking about what we do. Should we be selling the rip or expecting we're going to go lower, or should we be buying the dip expecting us to go up? We had some big news overnight. We were watching for it, expecting it, and it's quite notable that we are closing at the low of the day. So after we lost the low of the week, which was at 406.93, we can note that once we lost that area, it started really accelerating. What's really notable to me is that volume did pick up a little bit, but more importantly, the close, right? We've not seen a powerful sell into the close in quite some time. And this is so important because there is a big economic data point out tomorrow. So again, we were going down in this blue funnel. We started going sideways. We started going up. We started going sideways again. And now we are going down. We're almost right around that $400 area again. So again, the fact that we got a double sell into the close, 2 strong hours going from roughly 409 all the way down to 401 into the last 2 hours is very notable. Also a big fat red bar here, right? Biggest bar we actually have going all the way back to the bottom that we formed on May 20th. So, right, full circle. We go up, we go down, and we come right back down. So is this a trap? And if it is, who is the trap for? For the bulls or for the bears? We didn't even find support here at 405, which I was expecting. We briefly pit stopped there, but then we just kept going down. So we can note here that it didn't really matter what the number was, right? Red consistently for those last 2 hours, not a single bounce for 120 minutes trading. Anyways, what drove it? So we were looking at 3 key dates for this week. Thursday, which was pre-market, was the ECB rate decision. And then tomorrow we got core CPI. So we're now going to flip forward to the European Central Union. And I'm going to talk about that after. ECB confirms July rate hike plans, raises inflation projection significantly. So this is important because they're actually ending an era. They're ending the era of NIRP, negative interest rate policy, and then ZIRP, which is zero interest rate policy. So they are expected to raise its key interest rate by 25 basis points at its July meeting. So now we know the date and how much they're planning to raise by, and they're planning on going forward. What's also quite notable is that they actually acknowledge they made a mistake in terms of their projections for inflation, which means maybe they're going to reclaim some credibility going forward. Second thing, which I think actually tipped the market over the edge after we heard about that, we heard from the Bank of Canada. So the Bank of Canada Governor Tiff Maclean, again, asked if households could handle a larger than 50 basis point rate hike, says we may need to take a larger step. What could that mean? Well, 75 or 100. And I think the market has all but forgotten that was on the table. So two major central banks, again, Europe and then Canada, are not really giving a very good omen to the Fed. And we got CPI tomorrow, and then we got the FOMC meeting next week. So what we heard from the ECB today is a preview for what we're likely going to hear from Jerome tomorrow. I think all eyes are going to be on the CPI print. And I don't know exactly what's going to happen. Honestly, this morning I said if we get a move down, I'm bullish into Friday, but that's a powerful slam into the close. It's very hard for me to say that that's bullish. We're bouncing a little bit in after hours, but man, is it getting hurt out there. What's also really important, other than the date, is also OPEX, which is going to be coming in next Friday. As a reminder, that is $3.2 trillion that expires. So this is important because, oh boy, are there puts. There are puts. So again, we were talking about SPX. And if you remember, the levels we were talking about were, in the video yesterday, we were talking about 405. And we were also talking about 420. So we almost made it to 420 and we could not quite clear it. After a very long period of consolidation, we got a decisive break, and it's a bear break. So now the question is, before I go further, I just want to remind you that once we get back below 405, those 420, 415 put spreads on SPX are now becoming profitable. How much is that? Trillions of dollars, right? 1.7 trillion for SPX. It's a lot of money. So the fact that they weren't even able to get a bounce at 405 is very, very notable because almost always after we hit a key level, we at least take a pit stop. And we did, right? We took a pit stop right here at 404.4. We bounced up, and that is the only candle other than this one right here at 245 where there's actually an attempt to actually go back up. So there's almost no lower wick, and the upper wicks are only there's 2 of them on the whole move lower. And look at that close, right? Yeesh, 13 million shares just dumped. So people are clearly on edge going into tomorrow and can't really blame them. The CPI print is going to be very, very important. And again, is the Fed now going to finally admit defeat? The fact that there were 0 bounces here, that's a really big warning sign. We close at the we close at the low of the candle, open up the next one, and just start selling again. Open up, try to rally, sell, open, sell, open, sell. So this is not looking good at all. So again, all eyes will be on that CPI print. And if we're already below 405 and we go below 400, oh boy, that's pretty much lights out for the bulls. It's going to be very hard to create a bullish narrative if we have that move. Why? Well, as we look here to our weekly chart, again, today's Thursday, so tomorrow's Friday. Where are we? Ah, crap, right? We're all the way back to this green line, which is our, if we break this area, the bears are back in control. So we had 7 weeks of selling, we had 1 up week, we had indecision, and now this one looks terrible, right? From where we are right now, it's a lower high and a massively lower low. So once we lost that low of the week, again, at 406.93, it dove down roughly an extra 1%. And it's on volume relative to yesterday. It's quite notable. So anyways, that's pretty much it, what we have to go through for today. So now let's try to look through and see where we could go for tomorrow, because we were noting those put spreads on SPY. And if that's going to continue, let's see what matters. First thing that sticks out to me here is, again, I'm looking here at 175 and I'm looking here at 405 and 400. And I'm just noting that the open interest is actually the same volume, 175, 175. And then there's also open interest, which tells me that, again, they were motivated overnight and they're motivated again still right now. So where do they want it? Well, they want it at 400 on Friday. So if it goes lower, it doesn't mean they're going to get hurt. It just means that that's the maximum profit for them. It's right here at 400. So for the bears, there is quite a bit of open interest here too at 395. So we could definitely keep cutting lower, and we have to be mindful of that. 400 is a critical level, and it's so important because tomorrow is going to be Friday, and Friday at 4 o'clock is the most important price of the week. That is how our weekly candle gets formed. It pretty much tells us whether or not people want to assume the risk of holding into the weekend or not. If they're not willing to hold on to the weekend, we're probably going to get a repeat of today's last 2 hours tomorrow, regardless of where we open. On the call side, again, all we have is going to be these 400 calls. It's not really looking all that great. We got calls starting here at 408. There's probably a lot more above, but as of right now, it doesn't really seem to matter. So in terms of motivation, the bears are significantly more motivated right now. So if we're going to get a continuation bearish move tomorrow, I would not be surprised. So there you go. That's the options analysis for right now. Let me just have a quick look and see if there's anything else that is notable on the chains for next week. Why? Because next week is when we have that 3.2 trillion expiring, and some of it's pre-market, some of it's aftermarket. On Wednesday, we also have VIX expiration. So we got VIX expiry on Friday. All right. So what's very important as we look here is now going to be whether there is continuation at the same strikes, meaning why is it not letting me take a screenshot here? Something is funky. Oh, there we go. All right. Let me just see if I can get this to work here. Sorry about that. All right, I can take a screenshot again. Perfect. So we were noting 400, 405, 400, and 395 for Friday. Now we're looking at June 13th, and we're now going to look at where is the first thing that catches my eye. Well, this right here, the volume at 400, which was the busiest. 405, 400 were the busiest strikes for tomorrow, and the puts pretty much are here at 406, 405. That looks like continuation. This is pretty much MIA as well. There's not a whole lot going on this side. So that's notable to me. There's continuation through to Monday. Looking at Wednesday, very muted just because next Friday is going to be monthly OPEX. So that is going to be the date that more people are paying attention to. And yes, there is more continuation. So these bears are flexing. They're flexing at 405. They're flexing at 400 with massive open interest, nearly 100,000. Then we also have open interest down here at 395. And again, what's missing here? The calls. The calls are MIA. So if there's no calls and there's a whole bunch of puts, if we do crack 400, we have to pretty much believe it. All right. So now we've talked in depth about the bearish case. Now let's see what actually drove the market today, because it's important for us to understand where we came from versus where we're going to go. So let's have a look at the heat map. Woof! Right? Oh, my eyes, my eyes, my eyes, my eyes. This is not pretty. It is not pretty for Apple. It is not pretty for Amazon. It is not pretty for Berkshire Hathaway. It is not pretty for healthcare. It is not pretty for financials. It is not pretty anywhere. It's red. So let's look back to our 1 week. Equally red. It's just energy, which is actually doing okay. All right. Now let's look at year to date. Who's in the bear market club? All right. So we got Microsoft back in bear market territory at negative 21. Google negative 20. We got JP Morgan down 20. Woof. A big bank down 10. Down 20, sorry. Bank of America, down 20. Apple, down 19.7. Oh boy, is that going to join bear market again? Qualcomm, right? Down by 25, right? Everything's down like Amazon, down by 30. Tesla, down by 32. It's Nvidia, down by 38, right? That's our trillion-dollar companies. And it's only Apple, which is not back inside that bear market territory. So if we start going back below 400, is there another area that's really important? Yes, sir. It is a Qqq Monthly Level. Oh man, I almost forgot about that. Yeah, I know. That's why I do these videos, to try to remind you. So last year's low is 297.45. That's less than 1% from where we closed today. So if we keep going down and we lose this low here on Qqq, what do we have as resistance? 297.5 and 300, just like before. And right now, 313 seems like a very tough area. 313, 315. So if the market is soft, all the tech is now back lower. Our catalysts end up being muted, a little bit up, and then bearish, very bearish on Thursday. Friday is going to make or break. It's also bolded and underlined, which means it's the most important data point of the week as well. All right, so we know Mr. Red is coming back in full force. What about fear and greed? Do we have any of that coming in? 32, actually, wow. I'm actually quite surprised where, market participants are not really more scared, even though the market is taking a decisive move down. So that's quite notable to me. We're throttling here. Again, this is updated at 4:24, so this is accurate as of I'm recording it right now. So maybe this is a trap. I don't know. Right, I'm not Nostradamus. It's very notable, though. All right, looking forward to our next indicator here. I think I want to also remind people that I'll do that at the end of the video, actually. All right, so now let's go through a couple of charts. Let's see what's going on. All right, looking here, what's red? Well, I think the easier thing to do is what's green. So what's green is DXY, VIX, TNX. Oh man, those are the exact things we don't want to see green. Exactly. So DXY took a notable leg up, right? It's now up by 1% in the week, right? Took a quick pause and right back up. So I'm now going to go to my correct board. There we go. Let's go to DXY onto the 1 week time frame. And just pumped all day. So it added pressure all day. VIX back above 26, back to green on the week, flashing a warning. TNX, talked about this yesterday, right? Back above 3 pretty decisively. We got an extra 1% cushion above it. So we're at 3.04 here. Russell's down 2. FDAX is down by 2.4. What's notable here is that we ultimately repeated the FDAX candle wear. Again, if we look here at the last 2 hours, oh boy, it's almost like we had a template here. Yep. Right, open at the high, close at the low. Open at the high, close at the low. I get it. Oh, yes, right. The red team is drilling it everywhere. I'm actually curious what it looks like on the, back below the 50 DMA as well. Look at those bears, right? Yeah. What's notable is just the percent decline here. So negative 2.4 for the DAX, negative 2.4 for SPY, almost exactly. Oil is down. On the week here, again, it's still up by about 2%, so still adding pressure. We'll be noting that CPI print tomorrow. Gold, backtesting its 50 weekly. BTC is still in its pocket, so still green on the week. Actually pretty surprising. Got a lower low, got a lower high. We went over all that yesterday. Red, marginally here by about $100. ETH down by $1. Red on the week. And then these trillion-dollar companies. So again, now that we noted that year to date, everything other than Apple is now back to negative 20 year to date. We have to ask ourselves, are there any warnings that are being flashed here on these names? Why? Because if we take a massive move down tomorrow, we have to believe it. Apple, rejected, still in its funnel lower. That's not good. Apple's also at the low of the week, lower high, lower low, no lower wick, but upper wicks, which means it tries to rally, gets sold, tries to rally, gets sold. That doesn't look good. Microsoft, inside bar, doesn't look as worse as the others, but again, still pointing down, still has a dominant head and shoulders pattern. Yuck. Qqq. Actually, green on the week. Travel's been able to be pretty resilient here, but everything's going to get dragged down eventually, right? Selling's much more indiscriminate. When we go up, not everything goes up. But when we go down, oh boy, does almost everything go down. People de-risk a lot faster than they add risk back on. So Google stopped going down, but it's still stuck in this funnel here, right? It's still stuck going down like this. That doesn't look all that nice to me. All right, and then let's just delete this. Let's move forward. There we go. Amazon, woo, yucky. Last week's low, 11568, 116.1. Micro higher low. Andy Jassy spoke yesterday. People were, again, trading based on those headlines. This is a puke. It's a full reversal. It's almost a bearish engulfing. Only needs a few more cents and then it's engulfed. It's still got a cup and handle. This base right here at about 115, 116 seems really important though. Really, really important. And for volume, again, this is a weekly chart, right? We're looking here at the weekly chart. We're almost at last week's volume, and it's only Thursday, so we're probably going to get if we close red, it's probably going to be a bigger bar. That'll be notable. Why? More selling than buying. That's not good. Tesla still up by 2. Wow, right? Whoa, actually still holding this low here as well, right? I don't know. It looks better than the others, but is that a sign of strength or weakness? I don't know. Meta, name change today. Oh boy, it got slammed. 6.4. They're like, man, screw the metaverse. Let's sell it. This is a bearish engulfing candle as well. Took out the high and took out the low. That is bad. And this stock is already deeply oversold. So the fact that it's down by 6.5, that's a nasty cut. Nvidia, lower low, lower high. Yes, right? Just like everything else. So closing at the low of the week, pressure is building up to the downside. There is just not volume to confirm it. All right. Oh, every index is red too. Every ETF is red. So it doesn't really matter what you bought. There was nowhere to hide today. Dow down by 2. Lower high, lower low. Terrible. XLK, lower high, lower low. At the low. Looks just like everything else so far. IWM. Right. There was the warning, right? It hit the relative lower, the resistance, and that's where the flush started. So maybe IWM did flash us a warning. Maybe we have to pay more attention to it after. Or going forward, sorry. Higher low, higher high, but not a nice candle. It's got 187 on here, right? 187 on the chart. Yuck. ARK. I was looking for ARK to advance to roughly 52, so not all the risk has been added back on, in my opinion. I still think there's still potentially more room to the upside, but man, it's getting hard to latch onto this bear case right now. So there we go. Right down. It's actually positive on the week. So the Russell and ARK are actually up. Higher low, higher high. All right. Why? They're probably just oversold enough. NYA here. Bearish engulfing. Why? Well, again, it printed a higher high and it's got a lower low and it's at the low. That's terrible. Bulls made an attempt and the bears just squashed them, right? Bulls got annihilated. Falling out of the box here. So RSP also has a lower high and lower low. Yuck. XLF, lower high, lower low at the low. Yuck. XLV. Lower high, lower low, right on support, right in the pocket here. If it loses it, that could drag S&P down, which means 400 might get lost. There's nothing here that really tells me that it's ready to support SPY. Even XLE looks like a shooting star now. I don't know, right? I don't think XLE is really going to make that big of a difference. The size of the energy block here is not really all that big. It's roughly the size of Apple. So if Apple goes up and these go down, they offset each other. So energy going up is nice, but it's not going to like drag the market higher. It's not big enough of a component. Even XLU got slammed. People are like, man, screw it. Raise cash. Right? Yuck. That's a bearish engulfing candle too. That's a nasty candle too. It's a big one. EEM or emerging markets. That's a sell. That's a bearish engulfing candle. That's ugly. Oh man, this is not looking good. This is looking pretty bleak. FXI is up by 2.6. Even China couldn't save us. Man, this is not looking good. Oh, woof. Anyways, so here we go. So I'm not going to go through and repeat myself, but if you want to come back tomorrow, we are going to do a live stream. I do it every single Friday. Thumbnail will look something like this. If it's red, which it looks like it will be, you'll see it like this. Otherwise, this video here is going to queue up in a moment. It is our bear market repeat of 2008, which walks you through my thesis, and maybe it's just happening faster. So if you enjoyed today's video, I'd appreciate a thumbs up and smash a thumbs up, drop me a comment. If you want to watch a video that will queue up here in a moment, I encourage you to do that, or come back tomorrow for the final hour where we're going to stream through and try to make sense of what's happening. Otherwise, thank you for watching. I look forward to seeing you tomorrow.